The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble host. Once again, into the breach, dear friends, do we go? And of course, as we start off the show, we always like to check in with at least the S&P and see what's going on. S&P is in the middle of a trading range today. It was a high of 1927, a low of 1900, and we're back to in the middle of it at 1912. I suspect that we're going to see a little bit of this for the next few days. I am expecting, though, that we go back and retest the lows of what is it, Monday? Tuesday. Well, I'm losing track quickly. Probably about that, what is that, 1877, 1880 level. I think we get at least back into that one more time, and we'll go through the reasons why. Kind of alluded to it, but I'll give you an indication of that. We'll talk about a trade that we closed today and why we closed it and why we got into it, at least in the daily newsletter. What else do we have? Got a lot of stuff. So let's just get started.
And it's all just a little bit of history repeating.
On this day in 1928, the Dow Jones Industrial Average assumes its modern form, adding 10 new members so that it now compromises 30 of the top country's greatest growth stocks. Among them are giants like American Smelting, and of course, he who smelt it dealt it. Nash Motors, Hostum, a coffee substitute. How could that be in there? Texas Gulf Sulphur and Victor Talking Machine. Maybe I could have gone in there. I could have talked. They wouldn't have to build anything. I guess the Victor Talking Machine had to be a record player, right? I don't remember them being under that. Maybe it became RCA after that. Maybe they changed the name. I don't remember it. His master's voice. Yes, I could have had a dog listening to my record player. That would have been good on that. Anyway, when they talk about the day, the Dow, we can go back to 1928 and look at this day. It's the day that it got its modern form. For things happening out there that I think that are interesting in the market, probably the most interesting is BlackRock dumping BHP this week. They've been selling and selling and selling. But it certainly looks to me like there's a few companies out here that have a significant chance that they will cut their dividends. I suspect that BlackRock's dumping of BHP says that they will. Currently a yield of 8.1%. The shares, of course, have already fallen. Rio Tinto in the same business, off 30% in the last 6 months. And, well, it's off 30% compared to Rio Tinto's fall of 19%. Other stocks that look like they're in the targets of losing their dividends is Anglo American, 10.3% dividend already implies a very high likelihood that its dividend could be cut in the near future. But I think we're starting to see a lot of those, and we're starting to see some of these big hedge funds reach for liquidity in various places. They're selling their losers, but they're also selling their winners, and we'll get into that in a second. But yesterday I had Andy on, and I guess we really didn't have a good connection. He wasn't really on the same wavelength. We didn't have time to talk about what my thoughts were. But it certainly looks to me like we're going to have a Lehman moment. I don't know if that Lehman moment is going to be on this side of the pond or that side of the pond, but it certainly looks to me that something like Glencore or maybe a combination of companies and hedge funds that are seriously in commodities have yet to really see the bottom out here. I was looking at, what was it? Was it GG today? mean, a lot of these companies that are in the commodity space, even in gold, seem to be kind of tough. Was this one off? Yeah, this is off 3% today. We'll get it. We'll look at the chart on later, but it certainly looks to me like we're going to have continued rounds of de-leverization in this marketplace. And when you see somebody as big as BlackRock going to the mats, when BHP, pretty horrible looking chart. In fact, let's bring that up here for just a second so we can take a quick look at it. BHP. Anyway, to see big funds blowing out, and they're blowing this thing out, certainly not at the highs, so it's not distribution. But we've seen just the filings have been continuous. It also has a high volume low, which suggests that at least you're going to come back down to $30.15. It also looks like BlackRock is not done, and they have more to sell. They may get off of it for a few days so they don't just implode the price of the stock. But I think a lot of people are already betting that a lot of these companies are going to be losing their dividends in the not too distant future if they are in this commodity space. Let's just take a look at GG real quick before we look. You know, the volume, not that exciting out here. It was one of the stocks that I saw with a lighter volume. But what I'm going to get into later in the show, and I'll come back to this chart, is something I call being congruent. And we'll talk about that. But one of the things you like to see is, of course, a nice sign of strength followed by a nice pullback on light volume. And we'll show how my power law vector indicator number doesn't say this is the case in Gold Corp. And actually why I am thinking that we get almost all over the market a retest of those lows in the next few days. Now let's go back to our stuff here. BlackRock. Apple is down. Of course, I was kind of scratching my head because it really started to sell off yesterday. I hadn't seen any news that would really speak to why Apple was down. Well, it did come out last night. It had been leaking apparently in Taiwan. There's not a whole lot you can do to the Taiwanese if they supply and or if they know what your company is doing. In this case, it's Apple. But many of the analog integrated circuit suppliers indicated Apple slightly lowered its demand for supplies for the new iPhone in the December month. That tells you that it's probably not selling as well as a lot of people would think, and why we're already starting to see kind of moves down in Apple, and that is just because of light demand, apparently, at least for the first week of their new product. 108.71, is the wheels falling off? The answer is no, but it doesn't look like there's going to be a bullish case to be made for Apple. Could it go higher? Yes. Could these be overblown, or these stories be overblown? I think maybe slightly, but generally I've found that the Taiwanese media is pretty accurate on it. And these aren't the fine digital circuits that are high dollar stuff. This is the older analog kind of circuits and capacitors and a lot of other stuff that are high quality from the Taiwanese, but not necessarily the super big bucks components. But, you know, if you ship to somebody, you pretty much know who they are. And it's very tough to make a company that's making a penny per capacitor or resistor sign up to some kind of draconian thing. They just have to buy as they see fit. If you're a company making a lot of money, maybe you'll sign a contract with Apple that says that you'll give half of your company to them if anybody blabs. But for the most part, we've got the at least second or third tier companies out there saying that they are not they're not getting bigger orders for Apple, and that's probably going to put a pale over them for a little while. Mobileye was up a little bit. I think it was up 3% this morning. GM announced that it is going to get in the whole autonomous driving business. It's going to open up a facility in Warren, and it's a pretty big outfit up there in General Motors. Their Warren facility, test track. They're going to have all these things running around, but I don't know if there are going to be any any better than anybody else. Just for being in software all my life, there's always the thing that you do not know, and that's always what causes the problem. I think a lot of people are highly overestimating the technical difficulty and the cost of building autonomous driving fleets, and probably also don't anticipate me putting a cow catcher on the front of me and just pushing these horrible things off the street, because my guess is they're going to drive exactly to the letter of the law, especially after Volkswagen. They're going to be messing with the software to drive 1 mile an hour over. These things are probably going to have a lot of lag in them, and we're probably going to be sitting in traffic for 2 days because someone wouldn't kind of run the yellow. And I think that's how many cars go by because they kind of push the yellow. I bet these cars don't push them at all, and I'm going to be sitting behind a bunch of them wishing I could short circuit all of them. And of course, wait until the hackers get after it. If you think they're after Hillary, wait until they figure an easy way in. They're going to be crashing these cars into each other just for grins. Anyway, I think it's going to be a long time. If we can't figure out security for our nation's most valuable secrets, my guess is we're probably not going to figure out security for cars, and we're going to have pimply-faced 15-year-old kids in their basement driving these things into each other. But just my thought. Anyway, Illumina, also another stock getting hammered out here today. It was downgraded. I don't know if there's anything actually to it, but it is off about 18 bucks. Very interesting to me. It certainly looks like some of these bigger trading entities think that they would like to get into it because of the people that love these stocks. The hedge funds are in these things huge. 64 funds owned almost $4 billion worth of the company's shares by themselves, representing about 12.5% of the float. And it's not uncommon that hedge funds go after these big street names that decide that it's time to downgrade these stocks after the cow has left the barn. Dunkin' Brands also down. It had lower comparable sales, but the big thing is 100 of its U.S. outlets would be closed. This is because if you've ever seen them, there's a company called Speedway that has gas stations. They're kind of like a Thornton's, that kind of same kind of thing. Anyway, Speedway is going to close 100 of its locations, and those locations also are these larger, I don't know what they call them. They're almost like, they're more than convenience stores because they're larger. But some of these things have like Quiznos in them, other things like that. And these Dunkin' Brands are all in these Speedways, but they're going to close 100 of them across the country, so they're going to have lower revenues going forward. We come back, we're going to start talking about automatic rallies and being coherent at odds in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pezzo, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And one of the pioneers of price and volume trading did a lot of work with Jesse Livermore and Keene and most of the other barons of Wall Street, probably up until the 1930s, was a gentleman called Richard Wyckoff. I've got one of his books here. In fact, you can buy, I think, his original works for $3,000 from some institute out in the middle of the desert somewhere in Arizona. But most everybody's looked at them over time. They've left some things and gotten new things out of his original work. He was not only a baron of Wall Street, wrote his own newsletter, had kind of the predecessor to the Wall Street Journal, and a lot of people would come in and give him his theories in his office about how the market moved. One gentleman came in one day and started talking about in the 1910s about the idea of using price and volume to trade. He pretty much refined it through most of his trading career while looking over the shoulders of many of the barons like Jesse Livermore and a lot of the railroad barons. But he had it's an interesting book. Very nice. Of course, I pay a lot of attention to history, whether it's financial or otherwise. But he had some very interesting concepts. And he had one, but he never really had a name for it. I found some writings that he had in his actual newspaper when he wrote some columns. I've kind of come up to the idea that, and given it a name, I call it being congruent. And it's kind of the equivalent of if your buddy calls you a foul name but laughs at it, you know he's just busting on you. But if he's got a scowl on your face, he probably pretty much means it. And the idea is that as we move down and get lower prices, you can read in the low volumes of some of those days. You can also read in other things, i.e., now what I call being congruent would be something like, if we were just looking at Gold Corp, the September 11th low at $12.19, it goes to the September 18th high at $14.06, and it comes back down. Well, I've got my power law vector indicator number, and the energy off that low to the high, back to the low, is about the same energy. It's pretty close. I normally, if I can, would love to see the energy half in the next leg down to make me think that there's some kind of bounce coming. Well, we had a lot of these lows. We were talking about them on the air over the last 6-7 days. As the market came down, we continued to hit lows. Stocks quit going down. But what did happen is volume started to continually accumulate. And eventually, these numbers on the right-hand leg back down came close to the ones of the leg up, where they had been rather flat or low. And normally what happens is if you have this nice little bounce up and then no volume down, you don't have to do a thing that he called, or Richard Wyckoff called, an automatic rally. And you can have an automatic rally, and that is a rally without preparation, without doing the work that it needs to actually put in a bottom. Now, you've got sometimes what they call just the automatic rally off that September 11th low back up to the high, and then this pull back. And what can happen is that automatic rally can just turn right back into a move back up. But normally what you want to see is a vast differential between the legs down and the legs up. And we really didn't have that. And like I said, the market kind of turned very sour on Monday and Tuesday the volume wasn't higher. In fact, we've got maybe 400 stocks out here that broke the low. What they did do is continue this leg down, and every day sell down a little bit more, and more volume came in. And that's what I look at as the energy. So why he didn't have a word for it, I call it being congruent. I want if someone's telling me something good, then I want them to smile. If they're telling me something bad, I want them to frown. I want to know that what they're saying is backed up by the emotions behind it if I'm talking to a human, or not. But we're going to talk a little bit more about it and a trade we did with it. But this is why I think we're probably going to rattle around here. And within the week, basically the week from yesterday, probably next Wednesday, we're going to see a test of the next low. It's at least more likely than not. We'll be back in a minute. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, what I was going to say is that we really want to be looking for patterns in the market, and those patterns are going to be strong volume up and weak volume back, and not just on the highs and lows, but the volume and the energy in between those two. And I was looking at, in fact, we played in the daily newsletter, Generac Holdings. We bought it at the open yesterday. I think most people would have got it about $27.75. We sold it at above, probably most people got about $31.20. We sold it out this morning. You can get an automatic rally and a bounce, and of course I love this one. We've talked about it many times in the past, and that has been that of course if you see a hurricane, this is the stock to buy. And there were a few things going on, but as soon as the market started to sour, you could see the volume was fairly light in this, so we went ahead and took our cash. This one has pretty significant pullback, but I don't know, what do we get, $4 out of it and $3.50 out of it in a day, so not a bad trade. But again, I wasn't expecting this thing to go to the moon based on the charts, only if, since we haven't been hit by a hurricane in 4,000 days, Cat 3 or higher, I thought that there was a good chance that at least we get a day or two or three out of this. But since the market kind of turned south early in the morning, I think we sold it at 950. 955, something like that. But a nice little trade out here. I liked it because, of course, the volume was next to nothing. We went from 2.1 million shares to 1 million shares on August 24th to on the 29th, 650,000 shares, and a little doji. So it was probably the best one of the bunch out here, the only one that we played from yesterday, but interesting. In fact, let me go back. I wanted to show you some charts, and where's it at here? Let me get ready because I didn't change my list so much. But let's take a look at some of them, and we'll give an example of what I'm looking for. ADT. This one's kind of interesting. Let's take a look at this one because it really examines or shows what I'm talking about in having a chart that is congruent, and that is that you have a high volume low on August 24th, as most of these stocks do. It rallies off that. It has some great volume off that all the way to the high, but then you have this very light volume pullback all the way to the lows yesterday at 2.1 million shares. But probably hard to see, but 3.6 on the way up on my power law vector indicator and 2 on the downside. But you can see the high volume low here. We're back in. But now if both of these were 3.6, they'd tell me that this thing at best was in a trading range. At worst, all you're going to have is an automatic rally and then come back down again to the last low. In this case, the number is that August 24th low. And this is not a stock, or let me put it this way, a lot of the stocks do not look this way. Most of them have at least a similar volume on these legs back out of it. Let me find another one out here. RT. Ruby Tuesdays. Now this is another example of one. Doesn't have the energy contracting enough that I would buy it, but it is contracting. There are not a lot of these stocks out here. August 24th, it saw $6.16. Rallied, and that little number right there is 1.2. Went to the high on September 3rd with 1 million shares. Now it's come back, and again, energy's off about 20-25%, which is not bad for a restaurant chain. Not a lot of these things are doing all that well, maybe doing better than the market on some of them, but this thing came back, tested it slow. It's about 15% lighter. Not a lot of volume out here, but this is much more the pattern. In fact, if this would have had basically a lot lighter volume on this last leg down, I would have probably tried to snap it up too. But let's see what else we have out here. I mean, some of these dog stocks are actually making this pattern, and it pretty much tells you that there isn't a whole lot of energy left in these things to go blow out the lows. Retail Me Not has not tested the all-time low of August 24th, $7.66, but we are certainly back in there, and there's not a lot of volume. The other thing is there isn't a lot of energy. We're off about 25% on the energy on this last leg down. Unfortunately, we go look at a lot of the other stocks in the market, we're going to see that that isn't the same thing happening out here. Let me find one out here that I like to give an example of what I'm talking about. Cirrus Logic. Here it is. What you really want to see is, of course, one that will rally off the bottom on light volume. Cirrus Logic is not one of those. It actually came in, tested its low with higher volume. Now, you can get a rally out of that, but on both counts, neither the energy coming off that September 9th high back down to the low didn't shrink compared to the move before it. And back here at the highs, we've had a huge move, but more likely this is in a trading range than anything else. You'd like all of those to be congruent. Fossil's another one. This one has been beaten pretty heavily. Again, a lot of these stocks continue to go lower on lighter volume. We're seeing that in Fossil today. The August 24th low, $56.01, 2.1 million shares. We're down on 600,000 shares. But pretty much this looks to me like a lot of these stocks are really getting the washout. We're not seeing the volume or the volume come in any kind of strength compared to that August 24th low, but they are continuing down. And mostly we should start seeing these stocks actually rally and get back into the trading range, and they are not. And that's what continues to make me very nervous, but mostly suspect that we are going to retest those lows sooner rather than later. trading at 1916 on the S&P cash, 2.65 billion shares. So volume fairly decent out here. Let me see if there's anything else I wanted to look at. Some of these energy stocks are doing it. A lot of unknown. Another retail stock, URBN. Urban Outfitters is another nice one that looks to me like it might be trying to make some lows. Of course, the market's not going to help it out any. But you did have some fairly strong moves off that August 24th low of $28.22 up to the September 3rd high in Urban Outfitters. Then you had this nice low volume move back down, and energy's off about 30% on this one when you compare it to the energy on the way up, and light volume on the way down out here. But you're going to need a market that sees all these kind of bottom. And my next guess is that we need to get washouts in the bigger stocks. We talked about Apple earlier today, but my guess is that one of the things that's going to be a defining moment for a low is us getting back, at least on some of these bigger stocks like Netflix, and washing these things out. September 8th was $93.55 on 43 million shares. My guess is that we're probably going to see a couple of these big stocks, and maybe not the rest of the stocks. They may already be washed out, but starting to think that maybe some of these stocks in this FANG category, we're seeing Apple, of course, already weak, but maybe some of these other stocks are acting like they want to at least go back and retest some of these lows. When we look at Facebook, something similar. But here's where I'm starting to think we have some fairly significant weakness in the market that would take us back down to those lows. If we look at the August 24th low all the way up to the September 25th high, we had just in those over that 2-week period, a number 12 on my power law vector indicator number. On just the short leg down from September 21st to September 29th, we had almost the same amount of energy. You had 3 big days, and volume was fairly strong. We're getting a couple of days bounce out here. My guess is that we are more than likely to come back into the gap for Facebook. That would take you to about $81 to about $85, maybe $85.50, something like that. And I could certainly see maybe this developing in an ABC down, and maybe seeing the indexes continue to move down. Great other of these stocks just don't look like they have the kind of volume to really go after those lows. Let's take a look. VF Corporation. I like this chart on several fronts, but mostly you had a good strong move off the August 24th low up to the August 28th high at 73.55. Then you had a long meandering consolidation all the way back down to this low. You did pierce it 2 days ago. You did it on about half the volume, 3 million shares to 1.6 million shares. Now you had a nice pop yesterday. A lot of volume, didn't go very far. Today you got another doji out here. Even some of these stocks that look pretty brilliant will probably at least come back and test those lows one more time. They continue to have light volume. I think we're setting up for a nice rally in a handful of these stocks that maybe don't have the same kind of international exposure as others. What else do we have out here? You can give me a call at 877-927-6648. Question on TLT. Would it be a buy? Well, TLT a buy? Well, to me, the TLT is going to get into this gap. It's got no volume, so it's probably going to figure out. I would probably be much more likely to short this than go long. I don't like the energy was actually fairly decent off the September 16th low, and who's Jamie in Green Bay. But to me, the play here would probably, if we continue to see light volume as we get into this gap, or what are we talking? 15 million shares on the day down of the 25th of August. So, 25 million shares. We're into that same candle today. What is that? 25? 15. 15 million shares. We're into that same candle today with 5 million shares. If this thing could get up about 125, 125.50, I think right there you're probably thinking of taking a short. You may not get it. This thing may fail right here as light as the volume is. But I think you can make a pretty decent case that this is an ABC down with the volume off the bottom on a few days. But since the 28th, you've had 3 days of no juices. It's come back up to this. If you got an expansion out of this, we'd be looking at, let me set this up real quick. That would be the A. This would be the B. Come on, Mr. B. And that would be the C today. So you got basically, this one's probably going to do a 618. So you're looking for that gap maybe tomorrow, maybe the next day. But that would take you to 114.15 on an ABC down of the TLT. And I would suspect that is probably much more likely than not at this point. Energy was a lot better than that you thought, but it's really died as it's gotten back into those candles of the 25th and 26th. Hopefully that answers your question. I would not be going long TLT. I think that's the question. You can be like Jamie from Green Bay. Email me at path@tfnn.com. Or call me at 877-927-6648 or post a message in the den. What else do we have out here we want to look at? We got time for a little bit more. BWP, borderline pipeline. See if there's anything in that one now. Okay, Mattel. I've been waiting for this one to come down and pierce its low. It did yesterday, kind of bounce back up. August 24th, $20.50, 12 million shares. We've got 6 million shares today, so half the volume. Still a little over, an hour and 15 minutes to go. Again, these stocks, why they may have a short-term bounce, they're probably going to need at least one more cycle to get on a bullish bias. And the reason is, especially this one the last couple of days, did come down with higher volume. So the energy from and between those highs and lows, 3.9 on the way up, 5 on the way down. It's telling me that we've got about 20 to the downside since that September 17th high. And those last couple of days are probably the real problem out here is the volume did, even though it didn't get to that 12 million shares, did accelerate. And that continues to be an issue. We've just got a lot of these stocks that broke lows and continued on. Krispy Kreme donuts, we talked about that one. A nice little light volume test of the September 10th low, $14.62. Last 3 days, 730,000 shares, 600,000 shares. Today, 640,000 shares. Certainly nothing close to that 9 million shares, but we continue to close below those. We'll be back in a minute. Make sure and give me a call.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And got a question. And it says, "Hi, Dave." I'll say hi back. Is there an end to the nat gas bloodbath? And I have to say, no. I was long this thing at about 12.15. I didn't want, after the couple of days that it moved up, and actually moved up to almost, what was that high that day, $12.47. I didn't like the way it worked at all. Moved my stop up from 11.80 to $12 on it. And I think I was long at 12.15. And it, once it moved back down, I didn't have any problem selling it. It looks to me like there continues to be liquidation in this market. We talked about BlackRock selling BHP. I think we're going to continue to see people selling stuff forward and other liquidations in this commodity space. I don't think whether it's gold or silver or anything else, I think that there's a lot of pressure on these companies right now to get cash in any measure that they can. I can't tell you that that's exactly what's happening in UNG, but it certainly looks to me like they're doing anything they can to raise cash, and that continues to be an issue. So eventually, natural gas will make a low, but the chart did not look bad out here at $12, where this thing was going sideways for about 4 days, and that's why I bought it. It popped up. Just, didn't last a day, and that was it, and I was out. But I don't see a whole lot in it. Commodity space, it continues to look like there's some big seller out there, and I can't tell you when they're going to be done, but continues to be more than a few of them out there. Somebody asked about GNRC. As we said earlier in the show, we'd bought it in the newsletter at the open at $27.75 a day ago and sold it above 31 this morning. And I would not buy it here now that it's kind of failed. Let's take a look at the stock again right now. I mean, to me, I like buying it off that low, but I don't think I'd be buying it off this low out here today. It continues to look like you're going to get some sharp rallies, but they are not going to last that long. Dollar index at 96.19. Again, the Treasury Department is now getting rather blatant about trying to throw any cash it can into the Forex markets at 96.30. But each time they throw cash in, it is getting less of an effect. We're off 16 cents, got up to 96.50 today. This thing continues to chip away at that level, and I'm wondering when and how long the Treasury can continue to throw cash into that Forex market and keep the dollar down. It certainly looks to me like it's ready to break out or break down. My guess is it breaks up. But it's got a ton of energy behind it now. It's going to move probably in the next couple of days. Certainly looks like it to me, and it's going to be strong one way or the other. What else do we have? I want to look at PRB one last time. PRB. This thing should have held $5. It did not. It's been down ever since. It's off another 2.5% today. Let's get back up here. Come on. Another day, and the PBR, excuse me. And their government just can't get it together. They've kind of continued to make big problems for themselves in that, and it's bounced a little here, but it's down today. Not a lot of volume, but unless they get their government together, they've got the same kind of gridlock we have right now. Watch out for those Brazilian stocks over the next couple of days. We will see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.